What is up, S&P Nation? It's your boy here, TV. All right, we're just going to jump right into it, get straight into the S&P 500, Nasdaq 100 today. We had a little bit of continuation to the downside with a very interesting close at the end of today. Right now, so today, I really want to focus on the futures, the ES mini futures for the S&P 500, because I am seeing a rock solid pattern on the futures chart right here. This is a super duper, just crazy obvious consolidation pattern, bearish consolidation pattern, mind you, to the downside that we are looking at right now on the futures, which I think is very interesting that we have gotten this clear breakout of the uptrend, and now we have slid down a solid amount on the S&P 500, and now we are just inside of this range. And if we look at the chart for SPY, I told you guys, I said that on my video, I said, hey guys, it's very likely that we are just going to get into a trading range, and we are just going to see a lot of chop until the market has some reason to perhaps go up or perhaps go down. But I told y'all, I said, hey, 375 to about 387. That's a solid like 3%-ish range on the S&P. Do not get surprised if we just see some choppiness in that range. And sure enough, we are. You can see this point of control we have right here at 381. And today we opened right at that, basically. We came up to it, ripped down, came up, ripped down. We have a gap to fill to the downside, which we did fill a little bit of today. So we still have that big gap to the downside on SPY, 379, clear down to 376. That's a pretty solid, or about 377. It's a pretty solid gap. We filled a little bit of it, but then, of course, we gapped down today, and right at the end of the day, we had some nice buying volume, some big volume. So keep in mind, we do have another 3-day weekend. I know as stock traders, our lives are tough. We get 3-day weekends back to back. I don't know why, because it's New Year's is the 1st, which is a Sunday, but for whatever reason, the market is closed the 2nd, that Monday. So 3-day weekend. It kind of was a chop fest of a day, not great volume. If you look at the Nasdaq, the volume is even worse than the S&P. But the S&P is just, it could not be easier. We are in this range. And now this let's see here. This bearish consolidation pattern is not as obvious. It is there. It's not as obvious as it is on the futures chart. Actually, I kind of take that back. It still is. It still is. It still holds up. Yeah, you can see right where we bounce off of that. So that is really what we're looking at. It could not be easier. I love when the market does this. You just could not have a better setup. And it is super easy. Not easy, but it's super helpful when you get setups like this, because considering all the things, we are still in the major downtrend. If you zoom way out on the daily, we're still in the major downtrend. Almost every time we get these kind of consolidation patterns, we typically break out to the downside, like we had over here. We had this consolidation zone over here where we got the fake out breakout to the upside, and eventually we dumped. This has just happened quite a few times. We had a chop fest over here. We broke out of it to the downside. And it's very rare that we get these big bounce. We get a bounce off of resistance, and then we come down into a huge consolidation zone. And then it's very rare that we break out of that to the upside. So, looking forward to Tuesday, I would not be surprised at all, knowing the stock market, if we got a nice fake breakout out of this consolidation zone, out of this little bear flag that we're in, above this trend line right here. If we break out above that and we get a break above, and which we still have some gap to fill to the upside on this, so we could easily fill the gap, go above that, and then guess what? We have more gap to fill. So we have gap to fill from here to there, and then from way over here to all the way up to about 385. So not crazy big gaps, and they can get filled in an instant, like in a 5-minute candle. The buy orders just flood in, and then it just goes back down. But you have to watch out for that. So I would not be surprised at all. We get a fake out, we break out of this, we come up, fill the gap. We might even run up to 386. We might even get a crazy dumb fake out where we run up to 387.35. Wow, my cat's going crazy. We go to fill the gap above that, and then we run up to 390, and then we get that ugly, nasty fake out to the upside, trap some bulls, and then we come back down. So let's see. Can I draw that? You'd think I would know how to use this thing by now. There we go, the brush. God. So this is what I'm talking about here. We come up, hit this line, maybe bounce down. We re-break that line, come up, fill gap. We got gap to fill all the way up here. Fill that gap, maybe just rip right up there, come up to the top of here, bounce off of there, bounce right off of 385, and then come all the way up to like 390. Smack that hard, and then dump. That's what I'm talking about. That's the kind of things this market has been doing. We've just been getting kind of really disgusting fake outs like that. And then eventually we dump, and then we come down, test this trend line again, and then see what happens there. But then the same thing can happen to the other side, where we just tap the top of this, we break out, but then we go to fill the gap, and we just bounce off of like 376, or we bounce off of 375. You have to watch out for that. So that's why personally I'm waiting until we break out of this consolidation zone on the S&P 500. I'm waiting for a break above 375, and I'm waiting for a break above 387.50. And then above that, I need confirmation. So in this market, the upside's always so uncertain. I need confirmation, and confirmation that we're going up is if we can get a clean break of 390, and then we can run back up and retest this resistance up here at 400. Excuse me, I'm a little sick. And that's what I'm looking at to the upside. But to the downside, I just need to see a clean break of 375, or yeah, 375.12, which we do still have demand zones at 376.40, demand zone 375. But once we break those, it's looking like we can go down very fast. When you see all these weird gaps over here, all this crazy, like super fast price action where there's no consolidation, that is where those are levels where you can rip through fast, and I mean fast. So that's what I'm looking at on the S&P 500. If we look over at the Nasdaq has been relatively much weaker than the S&P 500. The range the Nasdaq is in right now is much smaller. And it is just, I mean, tech is just getting wrecked. It is just getting really wrecked. We are just in a 360 to about 367, 368 range. So, I mean, we got like a 2.5% range that the Nasdaq is in right now. But just same kind of idea. It is just really bearish consolidation, but the Nasdaq is even lower down. So that's really my that's really why I have the bias that I think we see more downside, is because the Nasdaq is so weak, and the Nasdaq makes up so much of the stock market, unfortunately. So that is what I'm seeing on the Nasdaq. We have basically filled all the gaps to the downside, but now really it just could not be clear. We just have support at 360. Below that, support 359.20, and then below that we have this big ol' zone where I imagine there will still be buyers here. So I could see a situation where we shred through that fast, but I could also see a situation where we stop. A lot of buy orders come in at those levels, like they did that CPI day where we just went freaking vertical. But I could see that as well, and that is really what I'm seeing on the Nasdaq. The Nasdaq did close above that 50-hour moving average. The S&P also closed above that, I believe. It's well above that, I believe. Yeah, so we do have buy signals on both the Nasdaq and the S&P, but today is just like these weird days right before 3-day weekends. You just get weird price action. I mean, today was like a mostly red day. We gap down, and then we just consolidate. This would have been a nice play. I personally didn't touch the market today, but this would have been a nice short. I mean, that's about as easy as it gets right there. Just consolidation zone, breakout to the downside, you get some downside, but it wasn't even a lot. You went from like 380 to like you felt like $1. And then we just got a nasty reversal. And you could tell where that reversal came in. It was the market just being like, nope, we're not filling the gap. Not filling it. A lot of people were grabbing puts thinking, yep, here we go, gap fill. Nope, nasty rejection. Bounce off that trend line. Bada bing, bada boom. But really, that's what I'm looking at in the market right now, is that just looking at, I mean, futures is almost way more I'd say it is. I mean, because futures is the market. It goes all day. You see all the data. This is all 24 hours of futures. So when you see this pattern on the futures, it is like, wow, this could not be more clear what is happening right now. We are just in the most obvious consolidation. I mean, it's just crazy. It's just crazy. You get a lower high, you get a higher low, a lower high, a higher low. It's just like something is getting ready to bounce, to make not bounce, but to make like a big move. So just got to keep that in mind. We could get a lot of chop early next week. Then we get a breakout to the upside. You know, like I said, fake breakout. We go fill some gaps and then back down. But I'm just going to be patient. I'm going to wait until we see SPY below a convincing break of 375, like I already said. I'm not going to get greedy. I'm not going to be like, well, puts are going to be expensive by the time it's down there. The whole point of waiting to see for the breakout is if it actually goes in the way you want it to go. So you can't just front load and be like, well, I think it's going to go. But then if it doesn't get below 375, well, you're not going to go any lower, obviously. In the market, if it has strength at 375, then that means you're probably just going to keep going higher. So that's why you need to wait for confirmation on your trades. You can't just like front load and think, oh, I could have gotten cheaper puts later, this or that. Sometimes that works out. I find most of the time, for me, it does not. Another play I'm looking at right now. So I told you guys about my NVIDIA play. That was a home run for me. I love that. So NVIDIA right now is also in one of these little zones. We are in a nice falling channel on NVIDIA. Pretty nice and clear here. And what do you do when you are at the top of that line? You typically look to the downside. And that's why I covered my shorts over here. I covered them like right over here, right there. I was like, we're at that channel. We're going to bounce. And sure enough, like clockwork, we bounced from 139 to 147. Small little bounce. And then look at that. We ran up to that level, 147, like I told you all about, that level where that gap was. We ran up to there. Reject, and now the market, I mean, it sold off and then it went to go fill a gap. So really NVIDIA is just being like sideways, doing weird sideways choppy stuff, consolidating. But you got a really clear trend line right there. And it looks pretty rough for NVIDIA. I think I personally don't want to hold puts over a 3-day weekend because, I mean, anything can happen. It could just be like euphoric. We got a new year, 2020 is over, and buyers are just going crazy this next week. But if you had some balls, you bought some NVIDIA puts over the weekend, then bravo, because I personally think they're going to pay. I do not think we break out of this channel. I think we are going to, if we do see a breakout, it's just going to run up to like 147. But if we do, if we get more above that, I have to humor all sides because I am not just a bull or just a bear. I am adaptive. How do I draw again? There we go. Christ. So if we do break out, I wouldn't be surprised. We see a nice run up to here, bounce off of there. Why is my thing doing that? Oh, it's because I'm so zoomed in. And then we bounce off of that and come back down. That is very likely, in my opinion. But we do know sellers are just sitting up here. They're sitting there at 147. We still have a really clear, I'm actually going to make that my trend line right there. We got a really clear demand or a supply zone right here. Sellers are waiting. There's still sell orders there. And then one right there, 146. So that's what I'm looking at on NVIDIA, but I really like it to the downside. I mean, you just zoom out on NVIDIA to the daily, and it looks prime. It is going to make another leg lower. There's just no doubt about it. You can talk about all you want about the earnings and stuff. They're going to be terrible, but just the chart is just screaming, we're going for the next leg lower. It is screaming at the top of its lungs. We are going lower on NVIDIA, and that is what I see on NVIDIA is still my favorite stock to the downside right now. Apple still looks rough. Apple still looks like it wants more downside right now, but I don't know. This has been a weird past couple days we've had. It's been bouncing, but then we just don't bounce a lot. Like not enough to be like, oh, this is a fake ass bounce. I'm gonna grab a short. Like it just hasn't been enough. So yeah, that's what I'm seeing on the charts. That's what the charts are telling me. I like NVIDIA to the downside. I mean, I really like everything to the downside, but I'm not convinced we're going down like right now. I'm convinced that we are going to see some weird stuff and then we go down. But what do we got? We got construction spending, ISM manufacturing index, so that's pretty important. for the month of November. Then we get some unemployment data, initial claims, continuing claims, yada, yada, yada. Crude oil inventories, and then we get unemployment rate, average hourly earnings. So this is going to be a pretty big day, January 6th. Mark your calendars. I believe that will be Friday. These get released at 7 a.m., 8:30 Eastern time. So 5:30 for Pacific Coast. Hour before market opens, we get all this big unemployment data. And that is going to be pretty important. It's just, I think the market just wants some unemployment. They want unemployment to go up. They need the Fed to be like, oh shit, we're doing too much damage. But the Fed is just like, they just, like, unemployment just hasn't moved. Like, this is the only recession where we're like, everyone's like, yeah, we're in a recession, but no one's having a hard time finding a job. Like, you can go and find a job still. It's crazy. I mean, in certain sectors. But if anyone remembers, like, 2008, like, shit, it was hard to find a job at, like, a Taco Bell. It was hard to find a job anywhere, doing any shitty job. And now it's like, you go to apply to any construction company, any blue-collar company, the places are just, they need people, and they aren't laying anyone off because they're so worried that those people won't come back. Because, hey, guess what? We just had COVID. So people aren't going to go from laying people off 2 years ago and then begging for them to come back, having to pay them way more, to all of a sudden laying them back off. So I think that's why these unemployment numbers are super important for what the Fed will do. God, my throat is killing me. But shit, man, that's where we at. If you had to take anything away from the market right now, it is just that tech is so freaking weak. Tech is just getting hammered. I mean, Tesla is finally getting a little tiny bounce. I mean, it's bounced like $12, which is honestly kind of sad. I thought by now Tesla would be ripping to the upside, but even Tesla is having a hard time bouncing. And if it does, I could see it bouncing like 135 maybe, and then bouncing off of that and going lower. But right now, it's just like everything's just looking forward to earnings. Like that's really it. And I think this is going to be one of the biggest earnings of like our earning seasons of our lifetime. This is going to be such a huge earning season because we have finally gotten all the rate hikes. Almost all the rate hikes are here, and they're starting to catch up. You're getting that catch up of the rate hikes. Last earnings was very important, but it wasn't really that bad because I think it was just like, yeah, consumers are just still spending a lot, but now we know consumer spending is coming down, and now it's just it's a time to see what sectors are going to get hit the hardest by those consumer spending going down. And in my opinion, semiconductors are like very, very high on that list, super high on that list. But then on the flip side, if consumer spending is still high and everything's still good, then I think the Fed is just going to be like, well, see, consumers are still just spending like crazy. So more rate hikes, market goes down. And that's what I think they're thinking. Like, what would stop inflation from just going back to where it was if they just dropped the rate hikes again? What is stopping that? There's nothing stopping that. People still have their jobs. They're still getting raises left and right. Consumers are still spending not as much, but still spending a lot. And that's like, I mean, we just go back to the way things were, which was high inflation. So that's really the weird part. That's the weird thing that we're in. This isn't just any other recession, man. It's weird. It's very strange. Let's look at the U.S. 10-year. Oh yeah, yields are still going up. Look at that, guys. I mean, I told you all about this I told y'all, look at that bull flag, dude. Just perfect bull flag. It's breaking out, and it has just gone straight up off of that, dude. I mean, come on. Let's look at the U.S. 10-year by the U.S. 30-year. The yield curve, I believe it is still inverted. Yes, it is. Yes, it is. Look at that. That's coming up to that support trend line. Look at that support trend line. Every time it bounces, boing, 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 we're hitting that. Watch out, folks. Look at the U.S. 30-year. Yeah, these bonds are just going crazy right now. They are going up, and that is not good for stocks. But one thing that is nice about the next earnings is that the dollar has dropped considerably. It has dropped about 10%, which is massive. I know it doesn't sound like a lot, but it's really big for these multinational companies. I don't think it's going to reflect as much in these earnings coming up as the earnings after this next one will, because this only happened so recently. But that is really helpful. Oh, let's look at the VIX. Gotta look at the VIX. So the VIX has been weird. Let's not get pretty about it. VIX has been doing some weird stuff. Right now, I see this, and that's really all I see on the VIX. But so say you're a bull. All right, so you're a bull. You think we are just getting a little scary and selling. People are about to we're about to go back up. I challenge you to tell me, how can the market go back up, and how could it really go up a lot, like a considerable amount, when VIX is so low right now? I mean, we got that big sell-off. We've seen a big sell-off on the Nasdaq and the SP500 from these recent highs that it made back in October. We've seen, or no, not in October. Back in December. This month. So we've seen a massive drop off of that, but VIX has done nothing. So it's like, it's hard to be so bullish when the VIX is still so low, but the market is going down. It's like, it's weird, because usually when the VIX is up here at 34, you can get bullish because you're like, yeah, the VIX has a long ways. It can go all the way down to like 18, 19. But now the VIX is already just sitting at 21. So it's hard to be like, oh yeah, the market can jump 10% right here, but it's like, well, the VIX can't go. The VIX isn't going to go down to like 15. It's not going to see 16 like it was seen back here in 2021. It's not going to go back down to that anytime soon. There's just no way. So that is another reason I'm pretty bearish, is because of how low the VIX is. So just imagine we get a crazy 30% day on the VIX or something. That might be a little excessive. Nah, about 20%. What's the biggest day the VIX has had? Yeah, 25%. Say we get a big 25% day on the VIX. We rip up here. There's still a lot of room before it's back up to 35. And if that did happen, the market would dump a lot. That would be a big dump. So there is a lot of room for the VIX to the upside, and there's a lot of room for the market to the downside. But there's not a lot of room to the downside on the VIX. I mean, the VIX is just at its support. It's just like any other stock. You see that support, you look to the upside. You see that resistance, you look to the downside. So that's another thing. You just got to look at all these things. So this is a longer video because it is a 3-day weekend and there's not going to be much else to talk about, I don't believe. But I appreciate you guys watching. Drop a like and a sub. I really appreciate it. Drop a comment. I'm not a financial advisor, not financial advice, but I love NVIDIA to the downside. So if that hits on Monday or Tuesday, I'm going to be on here gloating about it. And I'm going to look for some puts myself. But thank you all for watching. Have a good, happy holiday. Be safe.